What is going on, everybody, and welcome to another weekly update. And what I like to do in these videos is provide you guys some upcoming earnings, some upcoming events to get you prepared for the week ahead. If that sounds like something you're interested in, consider subscribing as I do provide daily content at Hammer137 as well on X to give you the pulse of the market. And I do, on occasion, provide additional videos here just on current events. So before we get started, remember to hit the like button and let's get this thing kicked off. Now, starting to this point, essentially everything is pretty much done, in my opinion. We are essentially waiting for that March 11th date with what is called the Fed Bank Terminal Funding Program is supposed to end around that time. Now, with that being said, this has essentially been going on since the pandemic, so that what you have is the banks not having to hold enough reserves on hand. So if that does, which Powell has stated that that isn't something that's going to be essentially re-upped, that is going to be a huge problem for the banks. And what we've seen is the banks are trying to reduce risk instead of essentially the Fed having to continue to increase rates because the banks are already starting to feel the pressure quite substantially. So, what the banks are having to do is close down branches to try to reduce that risk. And so, with that being said, they've closed. There's been a couple big branch closures. There's been a lot of layoffs just in the banking industry itself. There's been massive layoffs in the banking industry, just trying to cut a lot of fat to reduce the risk. Now that, with that being said, that is what we're kind of aiming for. We've had Nvidia earnings that just reported over the past week. That's what we were waiting for that final, essentially, one big key to the puzzle before we go into March. Now, March is typically around that time period where we have a heavy pullback. The question is will we get the cut with that pullback? And the cut would essentially price in a recession. But at this point, the narrative of this utopic state is still being out there in that we are at some of the best numbers, despite, we adjust things to make it look like people are still full-time employed, but it's not the case. When the Essential dialed back the amount of hours they considered full-time to 31 hours. So people are working a lot of part-time jobs with no benefits to show this quote unquote this great economy that we're in, which is which is quite a joke. But nonetheless, a lot of people are feeling the pain. And so, with that being said, that's kind of where we're at right now. We reported Nvidia earnings. Now we are, I think, waiting till that March 11th date. I'm not saying that some event can happen. There's no real big scheduled events to that point. Earnings will continue on for the next month and a half, or really about another month before we start repeating the cycle over and we start getting back into bank earnings and back into big tech and Super Bowl week again. It's just roughly about a month, about a month and a half away at this point. So before that new cycle occurs, and then we typically have a upcycle, a pretty bullish. April is really considered a bullish month, but again, we get a heavy dip in March. In October, the typically big months that we normally get a heavy pullback. It's not saying it's guaranteed, but that's typically when it happens. So over the past week, let's get into this. Over the past week, we've had two big earnings. Again, Nvidia being the biggest one, but we had Home Depot, which again is a good pulse of the market, gives you an idea of where the consumer is at. And again, they had another fifth straight quarter of declines. I've been talking about this over the last couple earnings that they've had, is that they are in really bad shape. And they could wordsmith however they want. They beat expectations, but the question, you have to take a broader look at a lot of these companies that are beating expectations. They are just like Apple. They've been in a steady decline. Things are bad. People took out home lines of equity to try to cash in last year on the equity with these ridiculous greedy home prices that went up like $100,000 to $200,000 more than what the price was just a couple of years ago, and people were paying for it because they're worried about the interest rates. And then now we find ourselves that nobody wants to buy, and houses in the supply is starting to grow. And with that being said, Home Depot, the home equity line of credit that people are taking out, what we saw the core CPI the previous week was that people are paying for food and shelter and energy are the biggest consumers of inflation right now, and continue to be big problems that aren't hitting no 2% targets. So they again can, so wordsmith documents, speeches, whatever the case is, to make it look utopic, but it is not the case at all. Things are in a bad state, and we are going for a hard landing. We are starting that hard landing as we speak. We've been in rolling recessions, and I think it's going to hit even harder at some point this year. But again, home line of equity that people are taking out on their homes, these essentially loans against their mortgages, are going to basic necessities. They aren't going back into developing equity in their home, because at this point they can't. So people are just trying to cash in on it. The problem is, unless you're actually getting a better investment on it than doing that, it's going to put people even more underwater. Now, one thing that we did see with housing is that it's adjusted from the average age being 35 to 49. So that means a lot of Gen Xers essentially are holding a lot of supply when it comes to houses, and a lot of them have been Airbnb'd, and that's running into a lot of issues as well. But at some point, over the next decade or so, they're going to pass away, and kids typically don't hold on to those properties at all. They typically sell them because they either want to invest that money into their own homes, or whatever the case is, or whatever other investments they want to make. But ultimately understand those homes are going to be up for grabs over the next decade or so, 2 decades or so. So just be mindful of that. And this is where the hard reset in housing is going to occur over the next 2 decades. And so even with all these heightened tensions and everything else, and the whole debate about higher wages and everything else going on, again, higher wages is not a good thing, because that's just going to lead to higher inflation on everything. And it's essentially going to price middle class and everybody else essentially out of the equation. So that being said, that's just Home Depot. So Home Depot, again, another bad quarter, just trying to give it some more insight in there. Then we had NVIDIA. NVIDIA crushed expectations, and their forward guidance was even higher as well. There was a lot of concerns on if they're going to be able to be sustainable. There's a lot of questionable things on inventory that are happening, and even we had the 9.2 billion in share buybacks coming in, and again, there's a lot of questionable things going around NVIDIA. But one of the biggest things, again, I want to bring up was that the fact that a lot of people, I think we are in a Cold War type scenario with China and Russia, because the next big thing is AI. And now we're also seeing humanoids becoming the next big thing as well. And one company that I've talked about and why I really like investing in isn't because of the EVs, it is Tesla, because they already have a humanoid. The question is now that they're essentially in the race with everybody else with is the AI portion of it. And so again, you have to understand the infrastructure is going to be built out over the next couple of years. It's going to take a long time, just because of the fact that with the AI, you'll have to have a lot of compute power. And right now, even despite the advancements we've had, it still takes a lot of space typically for any kind of cloud. That's why you're seeing a lot of cloud infrastructure and chips doing so well, because of that fact. Is right now is the build cycle. And then eventually here in about 2 to 3 years, I'm sure we'll get the hype of humanoids way before it actually occurs, just like we did with AI. But that is the next thing, is Amazon and NVIDIA are positioning themselves in a way for humanoids. And so again, the first person to essentially break ground with that is going to make it essentially can produce massive quantities, right, of humanoids, and understand that, yes, it's not going to just take it full force initially, but the first people that are out there are going to change life as we know it. Just like AI is currently changing life as we know it, humanoids will do the same. It will be even bigger impact, because then people won't have to fold their laundry, go take their dog for a walk, or do these other mundane tasks. As essentially humanoid would take care of those things. And then understand if it's a service, there's heavy talk about it being a service as well. So you would take it in for maintenance, whatever the case is. You would just pay the cost for it and not actually have to buy it outright. I'm sure you would at some point be able to buy it outright, but ultimately understand if it's a service-based industry, the massive amount of money that these banks are nowhere even close to what you think it's unsustainable, or look in the history, it will absolutely blow your mind what would be capable of using AI and humanoids at that point. Now you would say, well, it prices people out of the job, right? There's always going to be people that need to do maintenance and everything else on these humanoids and stuff. And so it's not like it's going to be a quick transition. Just like with AI, it's going to take a couple decades before that actually happens, but they are coming, they're here. And again, I want to be the first ones into those kinds of investments. So with that being said, so again, they beat expectations, they crushed expectations, but again, there's still some shady stuff there. It's really hard to say, but when you're trading stocks, you just get into the momentum ones. I still believe infrastructure is very much necessary. So even if we do price in a recession, get a pullback, I'm looking for humanoids, AI, and any kind of infrastructure plays that support that narrative moving forward, because I think that's still going to continue to be the big narrative of the next decade. So we will see there. And so the past week, we did have the Fed meeting minutes also come out as well. I believe Fed rates are at their peak. I do believe they could be. This is why it's hard to say. There's a lot of if statements kind of in there, and a lot of the meeting notes. They don't want to cut too quickly. It's all the same stuff they've heard. They're essentially very data dependent, right? Because we don't know. They could have hit peak, and this is why they're trying to dial back on the number of branches that are currently opening. So they're trying to make adjustments in the banks to see if it's necessary to even have to raise rates anymore. As long as the banks are backstopped, they don't really care, right? They want small business to go away. They want people to essentially liquidate them, so prices come down is what they're trying to do. They want to try to hold these rates high enough to where more houses and supply comes down, so the price of homes come down. And so the longer they can do that by holding rates at the highest that they can, they'll back the banks to do whatever they can for the banks, so that it's possible. So it's essentially what's coming out of every Fed meeting. It's not really going to change much, again, until we get that emergency rate cut. We don't know when that's going to occur. The layoffs are still occurring. All we can do is wait till the next earnings cycle and see what happens, because essentially, again, when we have Super Bowl week, we get tons of information. It's like we have a drought in between earnings on information. And then you get, banks, the New York bank went out, essentially lost 60% of its value, right? And so a lot of these are essentially dying off, and it's going to continue to be bad. And then if they start pulling out essentially the funding for that, for the reserves, you're going to eliminate more banks on that as well, because a lot of these banks don't have the reserves on hand, and so they're going to start there are going to be more closures coming in the next couple months. And so, and then again, pricing in a recession, there is normally during essentially an election year, there's a lot of manipulation that happens, which makes it bullish in a sense, but it doesn't mean that we still can't price in a recession, because it has happened back in 2008, right? And a lot of the same scenario that we saw back in 2008 and then the years leading into 2008 are the same exact thing that we've seen here with Home Depot and the Treasury. And, the Fed member in 2008 was Yellen, right? And so it's all the same narrative, except now she's in the Treasury. So again, things are not looking good, but we'll continue to watch. And again, the market will continue to go up until that linchpin is pulled, and the linchpin being the Fed, when the Fed cut rates. Again, we don't know when that's going to happen. In my opinion, it will not be scheduled. It will be an emergency rate cut like we saw in Japan, or like we saw in China. And then you'll start seeing a massive flooding of cash coming in, because you've killed demand so bad that people have lost everything. Now they need to build their confidence back to be able to come back and start purchasing, so that demand will die off quite rapidly. And again, all this data that we're seeing now is very lagging, to say the least. So upcoming weekly events: on Wednesday, we have the GDP. That's the initialized GDP, and that comes out at 8:30 a.m. Eastern Standard Time. Thursday, we have core PCE, 8:30 Eastern Standard Time. Again, these are intraday moves. I don't see them changing the direction of the market unless the market just wants to start selling off. Now, this is something that can happen. Normally in March, it normally pulls back and just sells off for no apparent reason anyway. That's part of the normal pullback cycle after this big earnings, after essentially Christmas earnings. You essentially have a big pullback, and then the market kind of adjusts itself and then chops or has some nice moves, kind of, but the real big push is towards the back half of the year. So with that being said, a lot of this data really is not going to really matter in the interim unless it's some real shocking stuff, but they've been good about filtering out any kind of shocking stuff so far. That can always change, just be mindful of that, but as of right now, not expecting anything until March 11th. And then upcoming event pivots. Again, the Fed term funding program, big date is March 11th. Monetary policy is right around March 20th. Core inflation is on the 12th. So this is why March is big. You have a lot of big things occurring, big events occurring around the time. You can even see in the when we get down to the expected moves that everything is like dwindling down to nothing. They're not expecting anything to happen this week. So again, that's a good kind of way to see things. Upcoming earnings. Again, there's still earnings that will continue to go on until April. And then the whole earnings cycle will reset. But as of right now, there's still some good ones out there. These are just two of them. I'm watching Lowe's again, another pulse of the market, just like Home Depot. Continue to watch that. Snowflake infrastructure play for AI. I want to see how well they do. There's been a lot of hit or miss on some of the infrastructure plays, but the ones that do well do extremely well. So we'll continue to watch that. Expected moves. SPX is down to 63 from 65 last week. Tesla came down a point. And then, of course, Boeing and JP Morgan haven't really done a whole lot. So with all that being said, let's go ahead and jump into some charts here. Like I said, it'll probably be a pretty uneventful couple of weeks until the next earnings cycle or until that March 11th deadline. Oh, you'll have all those big events occurring in March, and then you'll have right after that, you'll have the next earnings cycle. So we'll have to see again until we get announcement of a cut. I'm not expecting nothing but a healthy pullback, a normal pullback, and then we'll take it from there. So SPX again hitting all-time high. This is absurd. If you look at this again, I'm gonna actually hide this. If you look at this again, since essentially we've paused, we've gone nothing but straight parabolic. It hasn't really been, I think even if you look at the weekly, I don't even think there's been a red week. We had a couple of really small red weeks and that was it, but it's been like essentially pretty much green all the way up. So again, we had to pause here or else we would have started going for an all-time low or a new low on this new cycle. So again, there had to be a pause here. This was necessary because that was a very critical level. And I've always said events match right up with the charts. That if it didn't occur right then and there, we would have seen some really nasty things happen. And again, we paused right here. And that is what essentially put us parabolic. That's normally what happens after an official pause, and then we don't price in a recession until we get that first cut. So will we hit a new low? It's hard to say. If we don't get that cut for a while, this thing can continue up. It may go to 6,000, and then it would be essentially a 42% correction from that point, from wherever we are from that high. So to make a new low to 35, under the 35, 100 mark like we made a year ago, 2 years ago, when tech took a beating, right? Those are things. I do believe this bull cycle will be big because there'll be a lot of money printing. But again, you have to understand, you have to wait till that recession is priced in. You can't be ahead of the curve. And again, right now we're just in the normal cycle. We're in a normal pause cycle. Of course, we're going to go up on a normal pause cycle. That may take a couple months. It just depends. But again, the thing we're messing with is everything is so pencil whipped that everything looks so great that it's not the case. And then it may be delayed until after election, and we may not see a cut until the new year and the next off cycle in March of next year. Maybe a possibility. And then whoever is the president at that point would essentially, they were the one that created whatever the problem is. These problems are occurring. It doesn't matter what political party you're in. They're all under the same thing anyway, so it really doesn't matter. But nonetheless, it's going to be cast to blame, and we'll see what happens. So whether that happens before election or after, nonetheless, it'll be a big election year with essentially the tensions going around just the world in general with everything, with the bad environment that we're currently in. So we'll see with that. And then But again, we're in price discovery mode. So again, your strongest support is roughly around here, around the 49.40. So it breaks that. Your next support here is at the 40, kind of around the 4,800, just below that. And then again, your other support here at 45, it breaks that. Then you start talking about some serious levels down here. But there is a pretty big gap here and a pretty big drop there. So we need to pay attention to that. Now, Bitcoin has been very strong. It hasn't corrected at all, but I don't believe it's going to just walk away again. I believe they're trying to price it as asset class and not a currency, which gold is the same way. So we will continue to watch. I don't believe it's going to replace the dollar at any point soon. I'm not saying that it won't, but at the current point, I don't think it will. I think it's going to take another decade, 2 decades. It'll take a while. You're not just going to get rid of the dollar. It's not going to be that simple. So there's too many powers that be that will stop that from happening. But again, you never know. But majority of the time, on average, it takes a long time. It takes many decades for those things to kind of play out. So, but again, we'll continue to watch this and see what happens. But expecting a pullback when we price in a recession. Will we hit all-time highs? Looks like we have a little bit of a pullback on a retest here at the 4,200. Again, we're facing all-time highs in that next parabolic move. So are close to it. We will have to see how we interact or up here around that 69K mark. But ultimately, I think we're going to have one major pullback before that happens. I think the next pullback may just take us down to the 30K mark. The biggest thing is as soon as we do get a price in and this thing starts pulling back, is to watch levels, but ultimately watch where it starts consolidating. If it starts consolidating more than a couple of days, that means that you may have found a base pretty quick, especially in uncertain times with crypto. So we'll be watching this really closely. And I've already have some positions already on. I'm looking to acquire more positions or add to the positions that I currently have on a pullback. So just waiting and seeing how that does play out. But again, the next bull cycle, I think, will be a very big bull cycle. But again, there's going to be a lot of inflation and up and downs and chops that's going on. But again, we're just waiting for that first price in of the recession and then go from that point. So let's take a look at Tesla. Tesla. It's still at some low levels. I really still like this thing. It looks like it did retest and get rejected. I'm hoping this thing still continues to sell off at least down to the 150. I really like to grab some more Tesla shares at around 150. Again, I think the whole EV cycle, Tesla is still very strong leading in that. And I think with a cheaper car coming out next year and then the ramp up in production of the Cybertruck, is still the most talked about vehicle, I think, ever. So with that being said, they're still very much leading that industry, and that's kind of the current narrative. But ultimately, I'm more betting towards the humanoid side of everything. And that's where my focus is at with Tesla. So, and again, that will be a huge boom cycle when that does happen. We don't know when that's going to happen. I think they're starting to talk about it now. So I think we're only a couple months away from something major happening from the humanoid. The next thing aside from AI is humanoids, and that craze that goes out that follows that. So again, we're really watching this level. If you're the bulls, you really want this to break the 203 mark, and then again, you've been making really lower lows. So even if it goes higher, I wouldn't expect it to go higher than the 230. And then potentially start crashing back down, ultimately ending here roughly around the 150. Again, depending on what we price in, we have to see where the fear is at. If we continue to get fear on top of fear, and it starts essentially cascading, then we could get some really, really deep discounts on stuff. So again, we'll continue to watch and not assume. We'll just watch and see what happens and then go from that point. So Palantir, again, another big company I really, really like. They actually have a very solid use case for AI, which most companies do not. A lot of companies, I'd probably say 92% of the companies out there don't really have a good use case for AI. They just want to use that they're using AI. But again, to have a real impactful, I think, again, Palantir definitely leads that use case. So again, I really would like it roughly around under 15. If we can get back to 10, that'd be fantastic. But again, it all depends on timing. And you get your all-time high. I think that's the all-time high sitting at 29 here. So watching that closely. But again, big levels to be buying is maybe not so heavy here at the 17, but more so at the 15 if possible. And then really at this area between the 10 and 5 are heavy areas, in my opinion, to be buying. But again, we'll also wait and see what happens there. And then let's take a look at, we'll take a look at PayPal real quick. This is another big one that I think is going to do well with the new management and everything. It's really been consolidating and chopping pretty poorly. I think it will do very well in the next couple months. I think around Q3, Q4, PayPal will have a big turnaround as well. When you get consolidation like this, that's a good sign, especially when management and everything's changing. We already saw their last earnings. They did really well. Even though they pulled back, but I mean, they haven't really sold off. They've already sold off quite heavily. So I do really like PayPal as another potential play in the next couple of years, especially for an investment. I think it's good in my opinion. Do I believe in it as much as Tesla? No, but I still believe in it more than a lot of probably 85% of the other companies out there right now. BA again, chop. It's back in that nasty chop fest that we've talked about. This area is kind of its sweet zone where it just likes to chop aggressively in here. So we'll continue to watch how that does. Again, planes are falling out of the sky. I don't even know how it's $200. This thing should be like a $10 stock at this point, but it's not. So it's backed by the government. So they also help them with buybacks and hold this thing up where it's currently standing, or else this thing would be maybe even a $2 stock by now. But we'll continue to watch and see how it does. Again, it means a lot in the way the value plays are. Again, while I like to always introduce this, so just continue to watch these two zones between the 220 and again the 193. Again, the major level is down here at the 180. If it does attempt to come back down here, that could be concerning because it might actually be a break from that point. The first one, of course, you're going to get a nice bounce of it. That second one, you may get a small bounce back up to the 220 or the 200, and then it may dive and break that level. So you've got to be very careful on BA. Again, it's not a company I like to mess with, but it is back. So it does. I know a lot of people who do trade and swing this thing because it is back. And if you can find good companies that have a cult-like following or backed by the government, like NVIDIA, is a new one that's coming up, is that they will continue to pump the thing. So you try to take advantage of that, right? So we'll continue to watch those moving forward. JP Morgan, obviously, all-time highs. We'll continue to watch and see. We didn't really have much of a cool-off period. We have a slight cool-off during earnings, but again, we got another earnings coming up, and this thing is already starting to rip back up. So again, this is not a good sentiment. We only have one weekly pullback handle, and that was just from the all-time high test, and then it's still going up. So you don't want parabolic moves because that means as fast as it went up, it comes down twice as fast. So we'll continue to watch and see what happens with JPM. But again, I don't think anything is going to happen with it until we start getting cuts because things are just bad in general. And then we go from that point. So this video is a lot shorter than my last recent. But like I said, when we get in dry periods like this, I don't want to continue to talk about stuff. I want to try to pull out the stuff that's most important. This is why I don't try to do daily videos, because a lot of times there just really isn't a lot going on. There's a lot of chop going on. And so I don't want you to pull on positions, especially with a lot of these being at all-time highs. You don't want to be buying Tesla and PayPal are probably the best ones right now. They're heavily discounted right now. I still think a lot of things could be heavily discounted, and all those ones that are leading the charge right now are going to get a heavy discount at some point here in the near future. The question is, I think Tesla and PayPal could sell off a little bit more, but I think they've already kind of established a floor since they haven't really recovered. Tesla had that nice pullback on the last earnings, so that's really kind of helped it out. But again, I think even on the EV sector, I think they're going to turn those short-term numbers around. And then when the hype of the humanoid starts coming around, which could be in another year, it could be in 6 months to drive up the market, I think that will be the next thing that gets pushed heavy. And then we go from that point. So with all that being said, if you made this far, I do appreciate it. Go ahead and drop a like. And until the next time, I'll see you guys later.